Yeah, morning traders. We've got growth very much at the heart of the debate. You go into the US, we saw a very poor New York Empire manufacturing number. You can see the numbers there. There were big disappointment relative to expectations. Obviously, China's the buzzword at the moment. We're going to be watching these markets very, very closely today. On one hand, you saw a net withdrawal through liquidity channels. The MLF facility we had 600 billion expiring. They rolled over 400 billion. So there's a net withdrawal of about 200 billion yuan through that. But I think that was a sideshow. Everything else was really about the data flow. We saw credit data on Friday, which was very poor relative to expectations. Obviously, that can be easily explained by the lack of demand. But yesterday, we saw the retail sales number, industrial production numbers, fixed asset investment, all below expectations. So poor, in fact, that the PBoC felt compelled to cut the medium lending facility and also the 7-day repo rate. All the talk on the traps has been that they weren't going to do anything for any time soon. So this was a big surprise for markets, and obviously we've seen big reverberations coming through in the bond market, big buying playing through in 5 and 10-year Chinese government bonds. People there have jumped ship. They got out of the yuan. You can see a big move down in the CNH, the offshore yuan. We've seen big buys back into the US dollar. So dollar CNH has had one of the biggest moves we've seen for some time, up 1.2%. Obviously, that's giving lower purchasing power to the importers in China. But of course, the China proxies have been under pressure. So you're seeing copper down pretty hard. You're seeing crude down fairly hard as well. And Aussie dollar and Kiwi dollar as those China proxies under big pressure as well. We are watching that PBoC midpoint fixing coming through on the yuan fixing at 11:15. So obviously, if they take the midpoint up by more than what the market's looking for, i.e. weaken the currency, that could send negative shockwaves through the Australian dollar as we go through the day. What we have seen, though, apart from all that factors, is that the US equity markets continue to soldier on. A bit of a defensive rotation playing through, but generally speaking, despite the lower growth dynamics that have caused US treasuries to go lower and some of the commodities to be under pressure, is we have seen equities working. Now ahead, we are looking for Asian markets to open on a fairly flat note, but we are seeing some buys in the AEST 200. But ahead of that, we've got UK jobs, we've got ZEW confidence numbers, and we've got Canadian CPI numbers ahead. So a big day again. Trade with Pepperstone.